This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of January 17th, 2022. A holiday-shortened week as January 17th, the markets were closed in the U.S. in observance of Martin Luther King's birthday. There was a big news item that day, though, and many didn't notice at the time, but it was a rate cut. Very small one, but a rate cut out of China. Now, we wrote about what's called the Chinese credit impulse in our macrocast this year, and how a turning up of that credit impulse, a loosening of Chinese monetary policy, usually has a positive effect on commodities across the board. Well, we saw a positive effect right away on Tuesday as trading resumed, particularly in silver. And that was one of the topics of discussion on Tuesday, January 18th. So look at silver on the daily chart. I left the volume, total COMEX volume bars at the bottom of it. I did that on purpose today, just to show you that this is the highest daily volume we've had since late November, when, gold got crushed and silver got crushed as well on the 22nd and 23rd of November. This is also the first time we've closed above the 50-day moving average since the 21st of November. Not almost 2 months. Now look how this has worked. Again, the plunge through it back in June, at that June FOMC, when that's the date that our dollar channel starts. Riding below it, plunging below it, getting up there on September 3rd and 7th, plunging again, finally getting above it in the middle of October, riding it for support, and then extending from about 23.25 all the way up to 25.50 over the next month, with in between another test of the 50-day support. So getting above the 50-day is important. That's significant. Maybe they'll just reverse it tomorrow and jam it straight back down. But if they don't, if we continue to climb, then we're going to be starting to target 24 and change, where the 200-day moving average is. And remember that COT report from last week that we discussed on Saturday, which as of last Tuesday showed the banks being net long. And how I said that definitely means that any move to the downside is probably pretty limited. And then look what happens today. On Wednesday the 19th, it was gold's turn to shine and to play a little bit of catch-up, blasting higher by over $30, taking out some important technical levels that were resistance in the process. Very interesting day, and it sets us up for a very interesting rest of the week. Gold, definitely trending higher. These are two parallel lines, okay, off of that low in mid-December and then the high that came a couple days later. Those lines are parallel. That's pretty remarkable. Would suggest that gold's about to run into some resistance. I mean, it's comfortably above the two key moving averages of the 50-day and the 200-day. But there's going to be a resistance up here near 1860, right? You could expect that, maybe even 1850. 1860 over the next couple of days is the top of this little channel I've drawn. 1860 is eventually where you run into this trend line connecting the June highs and the November highs. So there's a lot of resistance in this area over the course of the next week. If we blast through there, people, myself included, are going to freak out and be all excited. But for now, it's just nice to be trending higher, and really what a nice positive day today. There were a number of things going on Thursday the 20th. Bond market turned and began to rally as the stock market completely reversed intraday and began to move lower again. That would be a concern on Friday and into next week, that's for sure. But one other thing we caught on Thursday was that silver had once again moved up precisely to its 200-day moving average. The high trade of the day was actually within 1/2 of a cent of that level. This level had been enforced as resistance by the banks a couple of times over the last 6 months, and here we are again. So we're going to have to pay very close attention to this development as we move into next week. And finally, here's that silver chart. This is the one that has most of my interest right now. And that is the 200-day moving average for the March silver, which is the current front month. Remember, we were above the 200-day for the almost the entire first half of the year last year. Remember, went up to 29 a couple times, looked like we were kicking ass. The second time we got up there, you can see on this chart, in May. Then we were smashed in the middle of June with the FOMC, tried to hold the 200-day support for nearly a full month. And now we've been under it every single day, never once closing above it since July the 16th. Okay? More than 6 months. This is a 9-month chart you're looking at. So we tried to get above there in early August. One day, hard reversed, fell sharply after trying to get above there. Tried to get above there for a period of 4 or 5 days in the middle of November. We know then, and we know now. Remember the swap dealing banks on the COT report went from net long 3,000 contracts, in the middle of October, to net short 10,000 contracts. So then that 1 week, those 4 or 5 days where we're trying to get above the 200-day up there at 25.50 in the middle of November, they went from 10,000 net short to 21,000 net short. And then look what happened. Fell substantially, $4 in the next month. So now here we are again. Like I said, tapping it today. We got to 2475.6 or something like that. And the high and the 200-day 2476.2. Look, I mean, odds favor pulling back tomorrow in kind of a, global worry, meltdown, whatever. But who knows? I mean, that's 3 great candles in a row. Maybe instead tomorrow we charge higher again and get above the 200-day moving average and close above it for the first time since the middle of July. I don't know. We'll see. But it is certainly not coincidence that silver got, the dollar was rallying and all of that. The banks took over and Globexed it this afternoon to the tune of 1%. But it's not coincidence that we got within a half of a cent of the 200-day moving average today before being turned around and heading the other way. Support? I don't know. You can see for yourself. 24 and then 23.50. Let's hope that doesn't happen. But I got to tell you, after the events of the last couple of hours, just about anything's possible tomorrow. And on Friday, January 21st, we wrapped up a very strong week for the precious metals and the commodity sector in general. Many commodities moving higher all week long. A little bit of a pullback on Friday, but that's to be expected after some extremely strong gains, particularly in silver, which is up over $1 for the week and moving into bullish territory. We'll worry about that next week, and we'll also worry about the stock market. All of it ahead of next week's FOMC meeting. Could there be a surprise rate hike? And no one's talking about that right now, but the stock market looks like it's worried, looking like it may close below its 200-day moving average for the first time since June of 2020. Looking for a signal that might get the Fed a little stressed out about their plans to hike interest rates. Well, a collapse in the stock market would do it. That's something we wrote about in our annual Macrocast. If you haven't read that yet, please go to tfmetalsreport.com. Scroll down the homepage. You'll find it titled under 2020 Macrocast Reality Bites. It's a free post. Anybody can read it, and I think you'll find it interesting. Anyway, next week will be interesting, too. I look forward to sharing it with you at TF Metals Report, and we'll have another one of these podcast summaries for you next Friday as well. Good luck, and have a great weekend, everyone.